Hello friends, welcome back to my YouTube channel. My name is Jaykumar, and today in this video I am going to teach you guys how to do futures trading on Binance trading platform. And this video is made for absolute beginner. If you watch this video fully, you will know how to do futures trading. I cannot promise you that you will learn everything there is to learn about futures trading because it is a little bit of a complex topic. You can learn a lot and improve your skills, but if you are a beginner, trust me guys, if you watch this video completely, you will start making money in the futures market, or you could lose some money, but that is the duality of the futures trading market actually. But this video will give you a good head start. So before we get into the video, I just want to do a small giveaway announcement. So we are giving away this Realme Buds Wireless 5 Lite. So I am going to do this giveaway once we hit 100 subscribers. So right now we have 55 subscribers. Once we hit 100 subscribers, so I'm going to select one random video and I'm going to select one random comment using random comment picker website, and that lucky winner will get this earphone delivered to their doorsteps. And to enter the giveaway, all you have to do is 3 simple steps. Step number 1 is to subscribe to my YouTube channel, and step number 2 is to like the video, and step number 3 is to comment what you think about the video. If you don't have anything to say, you can just say hi. So that is enough for you to participate in this giveaway. There is a good chance that you will win this, alright? So that's being said, without wasting any further time, let's get straight into the video. Alright friends, so Binance is the most popular cryptocurrency exchange in the world. So if you use the link in the description to sign up with Binance, you will get $600 worth of fees rebate as well as 20% discount on fees, and this is the best deal you can get on Binance. And if you use my link, you won't lose anything, you just get discounts and rebates. With that being said, let's get straight into the video. Alright friends, so before going into futures trading, I suggest you to watch 2 more videos regarding deposits and withdrawals and how the spot market actually works. So the links to this video will be down in the description or in the I button as well. So I suggest you to watch these 2 videos before watching this video, because it will be easier for you to understand the concept of futures better when you already know the concept of how spot market actually works. Alright, so that's being said, if you already know how spot market actually works and you already know how to do P2P trading, so we'll straight away go to the futures market. The part 1 of this video is the core mechanics of futures market actually. We'll first see about what is the difference between the spot market and the futures market. Spot market is nothing but direct ownership of the asset you are trading. Alright, for example, if you want to buy a Bitcoin, you are going to the market and you are giving away $100 and buying $100 worth of Bitcoin. So that is spot market guys. Very straightforward. In the previous video, I have shown you how to buy Bitcoin or any other cryptocurrencies in spot market. The settlement is immediate and the asset directly comes to your wallet. You can hold it. Profit potentials lies purely on the asset appreciation. There is no liquidation risk guys. If the value of the asset goes down, your investment value also will goes down, and if the price appreciate, you will be profitable if you sell it. So that is how the spot market actually works. But the futures market is actually pretty different. So it is a contract to buy a cryptocurrency at a later date, okay, but we are fixing the price right away. That is how it works. So in futures contract, we are actually buying the contract instead of the asset. By doing futures trading instead of spot trading, you will have some benefit. The first benefit is leverage. You don't have to have the full money to short or long your asset, because you can actually pay a small margin to take a larger position actually. So that is one major important thing. And the second thing is you can trade on both sides. You can either long the asset or you can short the asset. The market can go either way. You will still making money if you take a correct position direction. The third thing is hedging functionalities. You can actually take spot position and you can also take a future position to hedge against your spot position. Okay, so a lot of traders do this actually. Alright friends, so once I open Binance, if you go to futures section, actually you can see different types of futures. USDM futures is the most common type of futures trading that people actually do. These are the contract that is settled in USDT or USDC. So these are settled in stable coins. And you can also do coin M future where the contract settles in cryptocurrency actually, and you can also do options. Alright, so these are the different types of futures trading based on your settlement. So that's being said, if you open USD futures, from here you can see perpetual and delivery type of futures. This type of classification is based on the expiry of your contract, right? For example, this perpetual futures or nothing but it doesn't have an end date. It will keep on continue, it will keep on renewing. So you don't have actually a delivery date or end point for this contract, which means that you can close the contract whenever you want to close the contract. So it doesn't have a fixed end date. So that is the perpetual contract, and you also have a delivery contract. So Binance only have a small selection when it comes to delivery contract, because most of the people actually trade with perpetual. So right now as a beginner, I don't think you will have to learn more about delivery. I will make video about delivery contracts in a later video actually. For right now we will focus on perpetuals. Okay, so you can trade between USDT and USDC perpetuals, but these two things are actually pretty similar. Only the stable coin will actually change. I actually have some balance in perpetual USDC actually, so that's why I am going to choose that. So these are the major classification when it comes to futures trading in Binance. Alright friends, so without going deep into the actual mechanics of futures trading, especially perpetual trading, I am going to give a small example of how it actually works. Alright, so that is sufficient for you. So let us assume that this is the calendar is an asset, right? So I am thinking that in next 6 months the price of this asset will come down. Okay, so the contract price of this asset is close to the spot price of the asset. For example, the spot price of this calendar is $100. Contract price also will be similar. All right, so I am going to do a short sell of this asset. Okay, what I am thinking is, in the next 6 months the cost of this will come down to $50. So that is what I assuming. It is purely a speculation. So I am going to buy short position on this asset. All right, so for example, I am buying one contract worth $100 that this price will drop. All right, after 6 months, let's say if the price of the asset comes down to $50 and I sell the contract back, okay, so I am closing the position, so I will be profiting that $50. So this is how the short position on the Binance Futures Market actually works. And also, if you think that the price of this asset will go up in value, you can also do long positions. You can also buy the contract of long position, that if the asset goes from $100 to $150, you will get $50 of profit if everything goes well. So this is how the futures market actually works. But the important thing is that you don't actually have to pay entire $100, the value of this contract, because you are going to pay only the margin. So if you are trading in a 10x leverage, actually you have to pay only $10 to take the position worth $100. So this is a major benefit of the futures trading actually, because you don't have to pay the entire amount. You can actually do hedging with this futures market actually. Alright friends, so you can actually set your margin from here actually, arrange your margin requirements. Okay, for example, if you set 10x margin requirement, if your contract value is for example $60,000, so you actually need to have only $6,000. So that is how 10x leverage actually works. And you can also have even 100x leverage actually. So if you have a 100x leverage, so you actually need $600 to take position worth $60,000. But it is very risky guys, because you actually have to pay fees for the contract size, not your margin size. So that is why trading at 100x margin is actually not advisable. You can actually be okay with 1 to 10x margin. And there are two types of margin actually. The first thing is isolated margin, and the second thing is cross margin. So basically, if you use the isolated margin, only the initial margin will be used. That means when your contract loses more money than your margin amount, your position will be automatically squared off. But if you use cross margin, even if your position loses more money than your initial margin, your position will still be opened and your entire balance will be used. So that is why for beginner, I suggest actually you to use isolated margin. And if you have different position on different assets, you can explore how to use cross margin. So liquidation is something you actually need to learn before doing this futures trading actually. So this is the formula for collateral depletion threshold. So I will explain you how it actually works. Alright, for example, if you are buying one contract of this asset, it's worth $100 and you're doing 10x leverage and your margin size is only $10, and you are doing a cross margin type of futures trading. All right. So what happens is, if the price of this underlying asset goes 10% lower, actually if it goes from $100 to $90 and you are going for a long position with 10x leverage, if it goes anything below $90, the price difference itself will be greater than your margin. If that happens, actually the Binance will square off your position and close your position actually. So that is called a liquidation, and you will lose all the amount of the margin you put forward. Or if you are going for a cross margin deal, your entire account could be wiped out because of this liquidation. So this is a major risk of going for high leverage actually. So you have to keep that in mind, that you will increase your risk of liquidation if you trade on a higher leverage. And when it comes to order type and execution, we have market order, limit order, stop market order and stop limit orders. Alright, so first let's go for limit order. So basically what limit order means is that you are actually limiting the cost of purchase of a particular asset or a contract, right? So for example, if you want 1 Bitcoin worth of contract for $60,000, you can set the limit price to $60,000 and the order will be opened and only filled if the price exactly match your limit order or you get a better deal. Unless or until the price of the asset matches your limit order, the deal won't actually take place. So I'm going to teach you guys how it works in the terminal itself. So you have to set the limit price. For example, if the market price is 64,792 point something dollars, you can actually set a price, a limit price, and you can set your margin amount. For example, let's go for $100 margin. All right, and since we have a 10x leverage, the contract size will be $1,000, and if you go for a long position and you have a limit price, all right, so that is your position will be opened exactly at that amount or better. If the Binance couldn't match your limit price, that deal won't be executed. It will be staying on open order until the price hits. Okay, so that is how the limit order works. And there is a market order. So market order is nothing but if you are buying, like let's say $100 worth of margin and position size will be $1,000. If you hit buy, it will automatically purchase the best price available right now available in the market. So the execution will be immediate. You will be having asset, you will be having the contract in your hand, but the slippage risk will be a little bit higher in the market order. So as I said, the market order, the execution is immediate, but the slippage risk is a little bit higher because the price could drastically move within few milliseconds, and the fees is also a little bit higher when it comes to market orders, because you will not open an order, you will actually take the order which is already been opened in the market itself. And the limit order is that you are actually posting the order actually. So you will be a maker and the fees will be actually a little bit lower, and there is no slippage risk because it will only execute if the price hits your target price actually. So that is how the limit order works. The stop market and stop limit orders are a little bit similar, but the order will be opened only if the price hits the stop price. I will show that here in the terminal itself. So if you go for conditional, you can set the stop price and then you can select limit or market order. So if you do this setup, only if the current price of the asset hit your stop price, then your limit or market order will be executed. By doing stop market order, you can reduce your slippage risk to some extent, and if you use stop limit order, you don't have your slippage risk, but the execution may fail actually. Alright, if you do limit order, you can actually take maker fees or taker fees. So I have explained about the Binance fees in a separate video. If you want to learn that fully, you can watch that video actually. So I'll link that video down in the description as well. So these are the basic type of order, guys. So once we are taking position, so you will actually understand how it works. Alright friends, so this is the Binance futures fees actually. So if you use the link down in the description below, which I have given you, so you will actually get a 20% discount on your Binance fees actually. So the fees is very low if you are trading with the USDC currency pairs. So your maker fees is actually zero, and your taker fees is 0.04 percentage of your contract size, so which is significantly low when you compare with other broker as well, because Binance is the biggest platform in the world. They can afford to give you the best price possible, and if you use BNB as your fees paying currency, you can actually get even more discount on top of my discount. So there is also something known as funding fees actually, so you have to keep that in mind. Funding fees will be charged for you every 8 hours actually. It will be charged 4 times a day. I will explain you how it works shortly. If bulk of the market is bullish and they are buying more, so and you also buy more, you actually pay a funding fees for those who take short positions actually. Similarly, if more people take short position and you take long position, so you will be in the minority. The people will pay the funding fees to you. It is not a huge fees by any means. It is a small amount of money that you will be paying or you will be receiving as long you hold the contract. Okay, I will show you how to take a position live in few minutes, but before going that, we will discuss about risk management when it comes to futures trading actually. So you have to always place a stop loss. So this is mandatory guys, you have to do it. A lot of people don't want to keep stop loss because they have a fear that their position will hit stop loss and go in the direction which they have already took positions. To avoid that, you can actually put your stop loss way below than what you actually put. But either way, you have to set up your stop loss. It is mandatory if you don't want your account to be wiped out. Always keep leverage minimal. As I already told you guys, if you are going for 100x leverage, you are going to pay the fees and you are going to pay the risk for the huge amount of capital, and the possibility of your account being liquidated is very high. So always keep the leverage minimal as possible, and this is the golden rules when it comes to trading. You actually don't have to risk more than 1% of your total margin available. For example, if you have $1,000, you don't actually have to risk more than $10 per single position. And you should stop trading on FOMO. FOMO is nothing but fear of missing out. So you don't have to chase high speed price fluctuations or price swings. You have to see where the trend actually goes, and you have to create a model, and if everything aligns with your model, you actually have to take positions, and you actually have to set your stop loss and take profit beforehand preferably. So that's being said, so let's go to the terminal and take a position. Okay friends, so now I am going to take a futures position with Bitcoin USDC currency pair actually. So it's a perpetual contract. So what I'm going to do is I'm going to do a 10x leveraged trade, and my margin type will be isolated. I'm going to take a market order, so it will be easy for you to understand. So I'm going to trade with $10 of margin. Since I'm using 10x leverage, this $10 will get me $100 worth of contract. Alright, so I'm going to go for a long. Order will be submitted and it will be filled automatically. The position is opened, but I haven't set my stop loss or take profit. Actually, you can set it after your open your order as well. So I'm going to set my take profit stop loss from here. Alright, so I'm going to choose ROI as my take profit and stop loss trigger. So I am going to set take profit of 10% and stop loss of 10%, and the contract price will be set automatically. You can straight away enter the contract price, but it is difficult for you to calculate this and you can actually make some mistakes. So I would suggest you can use the same if you are a beginner actually. So once we set the take profit or stop loss, once the price hit your profit target or your loss target, the position will be automatically closed and you will realize your profit or loss. So this is how easy it is to take a futures trading position guys. Alright friends, so let's wind up this video, and in the next video I am going to share you some strategies. To watch those videos, don't forget to subscribe to my YouTube channel and like the video, alright? So that's been said, I'll catch you guys in the next video. So until then, bye from JK, bye.